What's up everyone? I am Jeremy and today I want to talk about buying the dip or buying a reversal. Basically when a stock breaks down and it plummets and you're hoping to find the bottom for it to bounce back. All my previous trading videos are about trading with direction. So in this video I wanted to show what happens when that direction changes and you want to take advantage of the situation possibly. So without further ado, let's get into it. All right, so if we take a look at, this is the NASDAQ 100. I chose this day because quite honestly, this was like the only day in the last 5 days where the stock opened up, dropped, and actually did a bounce. I'm using this day as an example to show how to find a bounce and how to play it. But right here, these white bars, this is basically when the market opened at 7:30 Central Time. I'm in Colorado. And then this bar over here, 1400 hours, that's 2 o'clock Central Time. So if you've noticed in my other videos, I mentioned that I don't like to trade the first 15 minutes to 30 minutes because the market is so volatile. I know you can catch a big move, and if you catch it in one direction and it keeps moving, fantastic, but that doesn't happen all the time. Example, this big green candle, that's the open of the market, and it didn't really do much of a direction change because we were pre-market in positive territory, bull position, and the next candle, we get a decent sized red candle pullback, and then the next candles green again, and then it couldn't get past that prior resistance really, and it failed. I mean, 2, 4, 6 minutes later, you're in the red already, and then it just fails. Well, the one nice thing is we are over the 200 SMA, and I use that 200 SMA just as a reference to see what direction is the market going. If it's above, it's a bull market for that day. So what I would like to do on this is to find the bounce, and as long as it's still over the 200, this blue line, and as we can see, the stock drops down here. You could say, well, hopefully this is the bottom, and it was. And as we can see down here, the MACD starts to change direction as well. We start getting positive bars on the histogram. Well, it bounces, nice little bounce, goes right past the prior resistance, which is a really nice sign, this big candlestick right here, and then kind of goes sideways for a little bit, and then it peaks out at about 854, and this was the resistance of the day. This was the highest it got. And then we get this nice big drop, this nice big pullback. Well, I think it was in one of my last videos on trading. I was talking about a fish hook. This is a perfect fish hook right here. We got this nice line. Picture this is the fishing line, and then this hook, and that hook is to catch a fish or catch a trader thinking that this is the bottom. This is a perfect example of why you would think this is the bottom, because this level right here, this was as low as the chart got earlier in the day. So that's the support level, right? Well, you could have caught a few bars, but then boom, 2 big red candles back to back. And if you did not set a stop loss or you did not get out in time, you just lost money. The one thing that is going on this fake bounce is no confirmation. It did not pass this red line. The red line is what I use in any direction. It needs to be on one side of that. If I'm choosing to take a trade, it has to be past the 21. You could use a 20. I think the 20, a 21 is a really good average. I don't recommend a 9. A 9 is really good if you're going in the direction of the market, like in the direction of the 200, but not on a reversal. You'll get burned so much, it's not even funny. But the other thing that's not happening is look down here on the MACD. we're still in negative bar territory. Basically, it gets close to this 21 and it just fails. It bounces off the 200, and now we start to see a little bit of strength. We see the MACD is starting to change direction. That's what I'd be looking for. And at the same time, it's finally crossing that 21 SMA. And this candle right in here is the first candle that holds above the 21. If I was not using the MACD, this candle, which is technically a doji is a candle that's the candle wicks, on the bottom and the top that are equally proportioned basically. And this doji was the first candlestick to actually hold above the 21 simple moving average. And that's where I would have taken my entry. And everything lines up great. The MACD is in positive territory. And I would use the 21, this red line, once again for my stop loss. If it breaks down below this and holds, I'm out. And luckily, it did not do that until further up. So if you would have held until it held underneath the 21, you would have caught a little bit. What's nice about selling part of your position is once you're in the green a little bit, it is smart to pay yourself, take some profits. And this would have been smart to do, especially because it bounced off the 50 simple moving average, came back down, bounced off, used the 21, this red line, as support, and then finally bounced through the 50 SMA, but it did not hold, and then it just kind of retreated and fell apart. So that's why it's so important to have an exit strategy as well as an entrance. You don't want to just hope that this is the bottom of the stock dropping and say, okay, well, hopefully this is the bottom. What are you going to do if it's not? Are you going to sell it if it gets lower than what you bought it for? Are you going to add to it? Got to have a game plan. So right here, as we can see, it did do some movement on this bounce from the high of the day, which was its resistance level. It did have a small bounce, maybe 50% to the resistance level. But then it did fail, and we're coming back down to prior support levels. Well, you could say once again, well, maybe this is the bottom. Okay, so you take your entry and boom, it just falls. That's in a 2-minute candle. You would have just lost all of those gains. And then if you're still holding, it's going down even further. So the one thing that the stock chart did not do, it did not pass the 21, the SMA 21. So I would not have entered in this. Actually, this is a really good short because we've got a crossover happening from the standpoint the histogram over here is positive, but you're underneath the 200, so that's a no-go for me. But now, once it goes back below and this first bar goes negative on the histogram, well, that's that first big bar that is going underneath, going away from the 21 moving average and the 200, from everything, and the 50, and then it keeps on going. So this is a perfect example of trading in direction. But I've already covered this. I don't want to beat a dead horse about trading in direction. Obviously it works. I trade I don't want to say I trade every day. I don't trade every day because of filming and editing for my channel, but whenever I do, I'm always profitable. It might not be a huge day, but I'm always profitable because for the most part, I always trade in the direction of the market. So for me, this would have been a perfect setup rather than go long to go short. Anyway, we're talking about reversals. So down here, we got the histogram. It's changing direction again, but we're underneath the 200. So, you're going against the wind basically. But you could use that 21 as your entry point, as your confirmation, and it passes that 21. That first candle that it holds looks like a doji again. It goes sideways for a whopping 6 minutes, and then it finally breaks out. And now we're crossing over the 50. Something that's interesting, check this out, guys. This is actually usually where I take my entry points, is when the EMA line on the MACD crosses over, and it's crossing over in the same, it's always going to go in the same direction as the histogram. When it's going up into these bars, what's happening on the chart? It's crossing the 50. The 50 is typically my entry for a reversal. You could say, well, you're losing all of this real estate right here. Yeah, but when that bar is crossing over the EMA line, not bar, when it's crossing over into that MACD, those positive bars, that's like double confirmation for me, and I like this setup. This works for me. So if this were to fail, my stop loss is going to be pretty close to any candle that is going to be holding underneath that 50. So if you were to get down here, I would recommend use that 21 as your stop loss. If it gets down into that 21, see how you feel. Do you want to keep going, or cut your losses now? But a good rule of thumb too with a stop loss, if you want to be ultra conservative, do like a 2-to-1 ratio, meaning hope to get twice as much as you're willing to lose. Typically I try to get at least like 3 times as much, and that's very easy. I don't want to say it's easy, but it's easy if you're trading in direction. But anyway, we're talking about reversals, and as you can see, so many times the stock comes down, fails. It finally kind of bounced a little bit here. You could have caught some points. This one, that fails. Finally, when it crosses over, notice the only bounces that actually worked are when it actually crossed over that 21. So the point is, wait for some kind of confirmation. I personally like the 20, the 21 SMA. You can use the EMA like I've said before, but have a game plan, and that's it really. I'm gonna cut it here. Like I said, I don't want this video to be crazy long. It's probably gonna be way longer than I anticipated. Anyway, so just to recap that real quick, just make sure that you're using some type of confirmation if you're trying to buy the bounce or the bottom of a stock. I love the 21 or the 50 once it's crossing over through the histogram of the MACD. It's more conservative, but in my opinion, it's safer. So, best thing that you can do is, look at the last week or two and use some different time frames and see what some of the patterns are. That's the best thing that you can do, because stuff changes all the time. What works this week might not work as well next week. I hate to tell you that, but this type of setup, typically, I'm not going to really change my trading style, but I do notice obviously the movement changes throughout weeks, months, throughout the year. So just keep that in mind. But anyway, please in the comments let me know what you guys think. I'm really trying to help you guys, because quite honestly, if I would have known about this, just even probably 5 years ago, it would have helped me so much, because I used to dip buy all the time, and then I would hold it, add more to what I thought was the new bottom, and oh my god, what a nightmare it was. So anyway, I hope you found any of this information valuable whatsoever. Please consider subscribing. It would help me out so much. Throw me a like if you can. Please stay safe out there in this crazy world. Be kind to one another, and I will see you in a few days. Bye-bye.